That tiny monthly payment might be the most expensive number you never calculate. Because companies don't always sell the price anymore. They sell the payment. $100 a month feels manageable. $1,000 feels intimidating. So you buy one thing, then another, because each payment looks small alone. But monthly payments don't stay alone. They start stacking on top of each other, and suddenly your paycheck arrives already assigned to someone else. This isn't just a personal problem. Millions of Americans use credit and installment products. The Federal Reserve found 82% of adults had a credit card in 2025, and 45% of cardholders carried a balance at least once during that year. Then there is buy now, pay later, making expensive purchases feel even easier. The Fed found 16% of adults use buy now, pay later in 2025, and among BNPL users, 26% reported paying late during the year. Even worse, some scheduled payments can trigger overdraft or insufficient funds fees. The trap isn't one payment. The trap is losing control of your monthly cash flow. So stop asking, can I afford this payment? Ask something much bigger. Ask, can my budget comfortably afford this entire commitment? Always calculate the total payments before celebrating the monthly price. Then check the interest, fees, taxes, and every other cost attached to it. Cars are a perfect example because a comfortable payment can hide an expensive loan. In the second quarter of 2026, Americans took out a record $211 billion in auto loans. A longer loan can make the payment smaller while keeping you committed much longer. Then the payment trap combines with lifestyle inflation, and the cycle gets stronger. Every raise gives you a choice: increase your lifestyle or increase your financial freedom. For non-essential purchases, try a 24-hour waiting rule before committing. After waiting, ask yourself whether you still want the item or only the excitement. Next, count every recurring payment you already owe each month. Create your own payment ceiling instead of letting lenders decide your budget. Then eliminate one unnecessary payment before adding anything new. That freed up cash flow can become emergency savings, debt reduction, or investing. The lesson isn't that every loan is bad. The lesson is understanding what you're buying. Always consider what the debt gives you and what it takes away from your future. The money that isn't trapped in payments can finally start building wealth. Imagine repeating that decision for 12 months. Your cash flow can look completely different. You may have fewer payments, more savings, and more room to make better decisions. Before financing anything, calculate it, wait when possible, and then decide. And before your next purchase, ask yourself one simple question. Does this payment fit my financial plan, or am I forcing my plan to fit the payment? That's the difference between buying things and building financial freedom. Don't let a small monthly payment make a large decision for your entire financial life. What's one monthly payment you're trying to eliminate? Tell me below and subscribe to Irfan Finance for more.
Thanks for watching. Subscribe to Irfan Finance. Join our growing family, and let's build wealth together.